one of the things that I've been getting asked a lot about, especially since we've been talking volume and volatility and day trading, as opposed to trend following and even opening range breaches, things like that. Rog, what are you relying on here as we go into 2023? Are you still looking at 5-minute opportunities? And the truth is yes. And I want to contrast a couple of them, right? So if we kind of look back on the pitches that I do like, right? If I'm a batter, where's my favorite little image? If I'm a batter at the plate, I imagine, right, this epic image, Ted Williams. This was in Becoming Warren Buffett, which I highly recommend everybody, traders, watch. And he used this image. And as he said, we, us traders, trade in what would be called a no-strike game. We can't call strikes against us. We can sit here and wait and wait and wait and wait because we're waiting for pitches in our preferred zone, right? You can see what Ted's is here. Okay. If I don't have a pitch in that zone, there's nothing to do. Now, what is the preferred zone right now? Well, they are quite literally zones. We have our hourly price movement range zone. We have our lower support zone on the V-score. We have our upper resistance zones on the V-score. So I'm focusing on two things. One is down here, this is volume. Not price-based, but volume-based zones, right? Here, it's volatility, right? Volatility-based zone. So I'm not relying on price in a strong way anymore. That means I'm not necessarily prioritizing price. So price patterns, things like that, be really careful about because the kind of volatility that we're dealing with, we have to be able to ask ourselves, how can we incorporate volatility into our trades? By the way, a lot of you have noticed I've got an upgraded wave that we've been testing out for now coming up on 9 months. Some of you probably noticed that in Charts and Coffee. And that updated wave, its job is to do a little bit of what we're talking about right now, which is be able to expand and sometimes dramatically when volatility is shifting so that we have a better idea of the zone and we have a better idea of the risk and the stop that would accompany the entry. So we're making upgrades to classic tools to deal with the environment that we're dealing with right now. And that's, hey, volatility is still working. That means that HPMRs and V-scores are definitely my preference. And it's just as boring and as awesome as waiting for that pitch. And anytime I get impatient and I start veering away from this mindset, the more trouble I get into. And again, here are the notes you can see on the left side. And this is where we started to outline, hey, Dow looks interesting. S&P looks interesting, right? And we're able to manage the idea by slowing things down and asking ourselves, does it merit looking at price-based entries, or do we want to make sure we're looking at supportive data from a volatility and volume standpoint? That's continuing to work, and then we want to scale that out, right? We just don't want to stop there. Now we want to ask ourselves, all right, if I want to stick with intraday, am I going to see opportunities in the hourly charts? Right? Can I start looking at zones like that on the hourly? We'll talk a lot more about that in the coming days and weeks, but this is a great example from this morning. Gang, the day trading, much like it has for the previous 6 months, the day trading, the short-term 5-minute, but being patient for volume and volatility zones does continue to work. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.